chat dog. What that dog? We full up the girl them. Every day a girl a call with. But I am over big, money man a free.
Welcome back to the Wake Up Call on X104.3 FM. At this time, we are joined by chartered accountant and former partner with KPMG, now working as an independent financial services provider, Mr. Brian Glasgow. Good morning, Mr. Glasgow. Welcome to the Wake Up Call.
Hi, good morning. Can you hear me?
Yes. Perfectly fine.
Great. And thanks for having me on.
Oh, no problem. Is it first time with us here on Extreme FM?
Yes, unfortunately, it's my first time. Fortunately, hopefully it won't be my last.
Nice choice of words. Unfortunately, it's your first time. All right, welcome. So you're a money man, right? You're a money man.
No, I know. I look at people's money. I don't have any of my own. I'm happy to have people's money.
So in some aspects, you are a money man. You look at other people's money.
Yes. So from that.
Okay. All right. So what I wanted to touch on first, right? The bank charges and bank fees that are applicable to St. Vincent and the Grenadines. Some banks will charge you a minimum deposit fee. So you have to have a certain amount of money in your account. If it falls under that, then they charge you a figure, right? Other banks will just charge you a fee point blank. So you're being charged to save here. And I'm asking because of what was shared by the Prime Minister of Barbados, where she made reference to banks not working for the people anymore. Yes, it's a private sector, but you have to sort of contribute. And why is it that poor people, right, have to pay to save, and they can't save like $2 anymore, and rich people also have to pay to save their money? I want to get to why banks charge to save money, and I also want to try to understand what is going on with the local economy where banking is concerned. So I don't know where you want to start with all of that.
Okay, well, let's start why banks charge. Banks are commercial entities. They're in the business making money. And banks are typically owned by third parties. For example, CIBC would be owned by investors in Canada and regional investors. But the primary objective is to make money. Now, banking has changed considerably in the last 40 years. At that time, like 40 years ago, banks were happy to have their money, and it didn't really matter to them how large or small your deposits were. What has happened during the past few years is the cost managing your saving on deposit account has increased because the technology cost of managing your account or just having an account with the bank are larger than they were years ago. There are more regulatory requirements, so the bank has to pay close attention to your account, and there is a cost to it. In addition, the interest rates have changed.
Sorry, what was that? The interest rates?
Interest rates during the past 25 years have declined significantly, and I'm talking about global interest, not just local interest. So firstly, and I think Prime Minister Mia Mottley would have alluded to this. People who have deposit at banks, firstly, do not get significant interest in investment, and because of the regulations from central bank, you will get 2%.
2% interest. Okay, Mr. Glasgow,
Now,
just one second, please.
If you have $1,000 in the bank, for instance, 2% of $1,000 is $20.
More the work.
Now, when a bank charges you transaction fees, for example, which is one way they make money, and a transaction would be, for example, anytime you make a deposit or a withdrawal from your savings account, the bank will charge you for doing that.
Okay, Mr. Glasgow, could you hear me?
I can, yes.
All right, so I'm going to make a switch, right? Because I don't think the audio is coming across very clearly this way, right? So I'm going to call you. So just give me a quick second there, all right?
Okay.
All right, thanks. All right, just give me a minute there, all right, listeners?
Hello? Yes, this is me.
All right, sometimes technology does that. All right, hello, welcome back.
Yes.
All right, so you can continue now.
Okay, thanks. I was talking about the way banking has changed over the past few years. The cost to the bank of having an account from anybody has increased because the bank has to comply with certain regulatory obligations in the case of anybody who has an account there. And we'll get to that later. The reasons why there are these new regulations. But as a result of that, because the bank has to spend more money to keep your account, they try to pass on the cost to the consumer, or in this case, the depositor. So the bank is not going to do you a favor. Any cost associated with running your account is going to be passed on back to you by the bank.
So is that a way that they're being cheap?
I don't think it's being cheap. To be fair to the bank, you cannot call that being cheap. It's being business savvy because the banks are in the business of making money. Right? So the banks have to protect the investments of the people who own them. So it is in their interest to try to recover the cost of having a savings account with the bank.
Okay. How does that affect? Well, I know that I'm hearing an echo. I don't know if it's me or if the listeners are also hearing. But are listeners hearing an echo when I speak? Just let me know. Right. So I know that for some people, right, they cannot afford to maintain a savings account. Primarily because sometimes you have to open an account to get paid, right?
Right.
So the money just goes in, you take out all your salary. Sometimes the banks would close the account and they have to go through the rigors of reopening the accounts. These are some of the challenges, and sometimes as far as closing the accounts because they just cannot afford, right? What are some of the other effects on the consumers or the banking sector with these charges that are being applied and passed down to the consumer?
Well, the obvious one is that, and as you correctly mentioned, it affects people more than it would affect people who have significant amounts of money. Because, for example, if somebody is getting paid through their bank account, which their employer insists they must maintain, what's going to happen is that the bank is going to charge, it's either a transaction fee, which is the fee for a transaction, or it's going to charge a monthly fee. These fees can be, in some cases, up to $10 a month. Apparently, in some cases, even more. Now, when somebody is getting not a considerable amount of money, maybe a couple $100 a week or a fortnight, and the bank is going to charge these fees, of course, it affects what that person is going to get. So a person in that situation, a banking customer in that situation, is not going to be extremely enthusiastic about keeping their money at a bank. Fortunately, and I know we agreed we'll talk a little about that later, but fortunately there are options. And, we'll, for example, talk about credit unions, which play a very significant and important role in the economy by protecting its members from the type of charges that banks would charge. There is a recent option called Dcash, which is a product of the central bank, which hopefully over the next few years or next few months even will catch on. It allows people to have an account with EC dollars in it where they can receive money and make payments. And that account can be operated from a mobile phone or from a tablet. And there are zero charges.
Oh, that's very similar to PaySwift, isn't it?
It's very similar to PaySwift. There is a fundamental difference, though.
The difference is where you can receive your money from, correct?
Not only that, PaySwift is a facilitator. So, for example, if you are making a payment to me by PaySwift, what you are actually doing is sending some money to PaySwift, and then PaySwift is sending the money to me.
Okay.
So PaySwift is acting as an intermediary. And depending on whether it's PaySwift or similar apps, there may be a transaction fee. Dcash is different because Dcash is really a form of currency called digital currency. It is literally like having the money in your pocket, except that instead of a leather wallet or a plastic bag with some money in it, the money is in an account which you can access from your cell phone. So when you pay any money, because of the transaction system that central bank manages, you are literally paying me directly. There is no middleman.
Okay.
There is nobody in the middle. It's just you see me in the street and you give me some money. So that's the difference.
Well, that is rather interesting. And the timeline of release of that product there, the Dcash, and at the same time, PaySwift pretty much disappeared off the market because they had some issues. But I understand that they're working behind the scenes to get things back up and running to at least where it was before. But it's just so interesting and coincidental. But I know if we start talking about that, we're gonna open a can of worms this morning. So maybe you can continue by saying you were saying some of the solutions and what the customer, the consumer, well, the person who has a little drop of money and cannot afford the account at the commercial banks, what can they do and where will they turn to?
Okay, and I think the most obvious one, and the one that is widely used in St. Vincent, credit union.
Uh-huh.
The difference between a bank and a credit union, well, it's not just one difference, but probably the most fundamental difference between a bank and a credit union is that a credit union, as you know, is owned by its members. So when you join a credit union, you become a part owner of the credit union.
Oh.
Right?
Yes.
It is a cooperative. When you go to a credit union meeting, whether you have $5 or $1 million, you have the same vote as every other member.
Mm-hmm.
So credit unions are attractive from that perspective. And in fact, when the first credit union was introduced to St. Vincent, and I think that was KCCU in 1958, that was the rationale to provide savings and loan services to that emerging class of people who traditionally would not have been able to even go into a bank in those days. So it was an exciting time for Vincentians who could now save money at institutions in which they were part of and borrow money on less stringent terms and more often than not at lower interest rates than they could from the banks.
Mm.
In addition, many credit unions offer interest rates better than the banks are able to offer. So it's attractive from that point of view.
Mm-hmm.
The other difference between banks and credit unions, because a credit union is a cooperative,
mm-hmm.
there is no income tax. So its profits are available for the members. And sometimes the members get forms of dividends. But in most cases, the benefits of not having to pay tax come in the ability of the credit union to pay you better interest on your deposits and to charge you less interest on your loans.
Oh.
So credit unions are a very viable alternative to banking for people who wish to go with credit unions.
Uh-huh.
And in fact, you remember a few years ago when one of the commercial banks started charging a monthly fee for the first time. There were literally queues of people outside the bank withdrawing their money. And let me tell you, most of that money went into the credit union.
Mm.
So the credit union movement in St. Vincent is, I am told, because I am not one of the experts on the credit union movement. There are many people out there who know considerably more about credit unions than I will ever know.
Mm-hmm.
But St. Vincent, I am told, has the second largest penetration rate for credit unions in the entire Caribbean.
Wow.
So that will give you an indication of how important credit unions are to the economy of the country.
Wow.
Credit unions play a very significant role in the economy of this country because it allows access and it allows people whose economic circumstances do not allow them the luxury of being able to pay $10 or whatever it is a month that the commercial banks charge. It allows them the luxury of being able to maintain savings accounts.
Okay. So two things are jumping out at me based on what you just shared, right? If more people are moving towards credit unions and away from commercial banks, one, credit unions are not commercial banks, right? I know over the years that they have tried to improve on their services with internet banking and their ATM cards, but they all have to bank at a commercial bank. Now, if everybody is moving, or most people are moving because of the charges at commercial banks, moving towards credit unions, what is going to happen to these commercial banks? Is that primarily what is leading to de-risking? Or
no, de-risking is something else, and I would suggest let's talk about de-risking a little later in the program,
yes,
because
okay.
that's something I would like to talk about.
Yes, okay.
The move from banking to credit unions by some people, and I don't think it's a significant amount to the extent where it'll affect the banks. Mm-hmm. In fact, I think it will assist the banks to focus on their business activities. So, there is room for banks and there is room for credit unions. Mm. The focus is different.
Okay.
Most people need banks, apart from savings and loans. But most people who use banks for purposes like facilitating foreign exchange transactions. Mm-hmm. That's probably one of the biggest reasons that people use banks. For example, if you need to buy something on Amazon or you need to buy some supplies from somewhere in the U.S., you need to go to a bank. And because in order to conduct certain types of transactions, you need a banking license. Credit unions do not have banking license. So, that is also one of the fundamental differences. Credit unions are essentially regulated by the governments and by themselves. They self-regulate. They regulate through the leagues, credit union leagues, and they regulate themselves to some extent. Mm-hmm. Banks are regulated by the Eastern Caribbean Central Bank, right? And to conduct certain types of banking institutions, you must be a bank. So there are reasons why people will need banks, and there are reasons why people will feel comfortable remaining with credit unions for their basic savings and loans.
Mm. If more people are moving towards credit unions because the interest rates are better at credit unions, banks will depend on interest payments from their loans. How does that aspect affect the overall banking sector?
Well, just to clarify, as you know, and as I tried to suggest before, there isn't an exodus of people from the banks to the credit unions. Mm. And most of the people who are either have moved or will probably move from banks to credit unions are people with smaller deposits.
Okay.
Now, the commercial banks, as I mentioned at the beginning of the program, there is a cost to managing the savings accounts, especially of smaller depositors. So the credit unions are actually facilitating the banks by attracting a number of these smaller sized customers away from them and into the credit unions. Banks make money mainly from business transactions.
Okay.
You know, a credit union member might come in and want a loan for Christmas of $500 to buy a new dining table or something like that. That isn't really the kind of business that banks want. Banks want, you know, a business person in town who is going into a new venture who wants to borrow $500,000. That's the kind of business that the banks want.
Big bucks.
They want the big bucks. And, you know, it's justifiable and it is consistent with the objectives of each institution. So it's not a matter that the banks are getting in the credit union's way or the credit unions are getting in the bank's way. There is room for both.
Okay.
And for the economy to continue to grow and succeed, it is important that banks and credit unions coexist. Right? They must operate together in the same environment, but serving different markets. There will be some overlap now and again. For example, the credit unions might offer a loan to somebody who is considering going to a bank and offer them better rates, but that wouldn't be detrimental to either the bank or the credit unions in the long run. A little competition is healthy, but essentially they are serving two different focuses, two different markets.
Okay, this is rather interesting. I used to work at a bank, right? And there were implementations of charges, and sometimes the charges would go up, and customers, everybody was of the opinion that, oh my goodness, this is just so unfair, and customers would argue time and time and time again. I wish that I had known this back then. I know that there was a cost to maintaining accounts. I know about, is it still the 2% levy tax on savings?
Yes, there is.
All right, so there's that. And I wish I had known some of the additional pointers that you pointed out now, back then, because sometimes, personally, I used to feel bad. Poor customers, yeah? But I mean...
No, I understand.
Yeah. And sometimes what would happen is that some customers would not have a choice but to have an account at a commercial bank because of the products and services, the services that are being offered. So they don't have a choice. But I mean, as you mentioned, it's in the minority. So it would not really have an effect on the overall climate per se. Now, it is 5 minutes after 8 o'clock, and I think that we can take a quick break right now. Run to some ads. We have a 10 minutes with Digicel, and then we're going to come back and talk about de-risking and what has been happening in the Caribbean over the past maybe few years, and very, very recently this year actually with CIBC and the consortium, and what that means, what that meant, and what that will mean for the future. All right? Okay,
looking forward to that part of the discussion.
All right. Thank you so much. All right, we'll be back. All right. If you want to share your views, 430-1043 is the number to send your WhatsApp message or voice note. We have a few responses coming in from Facebook as well. Hi. Good morning, Kathy. Good morning, Joshua. Highly favored, Sai and Sue. Good morning to you. It says here, unfortunately, banks cannot operate as a susu hand. Good morning, Elliot. Somebody says, everyone now writing off PaySwift idea as they want a cut instead of investing in PaySwift and expanding on the little man. That is a whole other day. A whole set of other drama, all right? The banks always in trouble, ripping off poor people's money and running them around the block for no reason. Just reading the responses here. Good morning to Torres. All right. Some voice notes here, but we gotta listen to them before we could even consider playing them. All right. Let's take a break and come right back right here on the Wake Up Call. Okay.
Island sky. We got the time to make you go. Oh.